if they are to revalue, the U.S. government gold, I think right now the valuation of that gold is $44.22. It's 44.2222. Okay, and they did it last in 1972. And Judy said if they're to revalue that today, they'll do it at mark-to-market value, like you said, Danny. And then one of my followers is actually friends with a ex-central banker, a ex-Fed member, actually.
Okay.
Okay. And that particular person said that they are going to do it, and they're going to do it at mark-to-market. Exactly like you said. Like, you know, if it's like, I don't know, 3,200 bucks per troy ounce, let's say in a couple months, that's where it's going to be, right?
You're watching Capital Cosm. My name is Danny. Today's guest is Eric Yeung. Eric, thank you so much for coming on the show, my friend.
Thank you, Danny. It's a pleasure.
Yeah, Eric, there is a ton of news to get to, especially in the precious metals realm. I'll let you kind of kick it off here. For you right now, what is most topical? We've got the LBMA, deliveries being blown up there. We've got so many other news items, but I'll let you start things off. What is most topical for you at the moment?
I think the biggest, news right now is that the LBMA is blowing up. It went from 2 to 4 days of delivery of the gold contracts to 48 weeks. So that's a report that is done up by the Financial Times on January 29th. Okay. And on the Comex side, in the month of December and January, the physical gold delivery at the Comex was at 498 metric tons. And for the month of February, the last I checked, which was a week and a half ago, it was at 200 metric tons. So by the time February, first delivery date comes up, I imagine it will be at 250 metric tons. Now, a lot of people say, fine, like this, you might have like a lot of delivery at the Comex, but it might not necessarily be withdrawals, right? I mean, it can just be paper settled. That's what a lot of people say. It can just stay in the Comex vault and paper settled, right? But traditionally, as you know, Danny, if that's the case, that gold wouldn't be imported from London because there's the transportation cost, right? Your last guest, Esther, talked about that. Every day there are planes coming over nonstop from London now to the US. A couple tons here, a couple tons there is nonstop, right? That costs money. They if this is just a paper swap, they won't do that. I'll give you a figure, right? Around 400 metric tons of physical gold came from London to New York, like from the LBMA to Comex.
Right.
In the between the end of November to the end of January. Okay, so that's a lot of gold to fly over for paper swapping. It's not happening. I don't think that's the case. So what I'm trying to tell you is that somebody big is instructing all these bullion banks in New York at the Comex to take physical delivery, okay, of all this physical gold. Now, whether or not they withdraw all of it immediately is inconsequential, right? Let's say my thesis is actually the US government instructing the bullion banks, right? Okay. So if it's the US government doing it, they don't care if some of it stays at the Comex vault.
Mm-hmm.
Because they use the Comex essentially is an arm. I know it's not exactly an arm of the US government, but it might as well be, right? So that's basically my base case. And by the way, if it's not the US government telling these bullion banks to do this, right? I think the Comex would shut them down so fast the head will spin, okay? Just like what they did to the Hunt brothers. They wouldn't let it blow up to to like to this level, right? To the point where the LBMA is now unable to deliver physical gold at a normal time frame. So so that's it.
So yeah, you've got you sent me a chart here or a diagram showing the transfer, illustrating the transfer mechanism between the LBMA and the Comex. Do you want to go ahead and explain what that is?
Yeah, that's awesome, Danny. So like what that is actually because of the huge physical demand of gold at the Comex, right? And they're draining the LBMA, as I just told you. It's actually blowing up the EFP trade pair, that most bullion banks, I would say in the past and even currently, have in place. So I'm going to explain to your audience what the EFP trade pair is. Okay. Trading pair. Okay. So what bullion banks usually do, okay, is that they would short the Comex. You see that arrow, right? In my little bubble on top. Short the Comex contract, and they would long the LBMA. Why do they do that? Because the LBMA usually has a slightly higher price than the Comex. Like, same type of gold I'm talking about, like, similar contracts, right? So they would make money off that arbitrage, right? And that works when, the EFP mechanism is purely cash settled, okay? Which is 90% of the time. 90, some people say 99, right? So I'll just say 90% of the time, okay? If it's cash settled, who cares, right? You're making a bit of money, right, off that arbitrage. Right. But what is happening recently, right? As you know, I just told you, the LBMA is short of physical gold. It's apparent because it's it's 4 weeks to 8 weeks right now for delivery, right? So what is happening? The price of LBMA gold contract, which I call forward contract promissory note, because they can't deliver right away, right? So it's a forward contract, right? That piece of paper is getting dumped in price, okay? So it's actually lower in price than the Comex paper price, gold price.
So it's screwing up the arbitrage.
You're the guy making happily, that, I don't know, like 1 or 2%, right? All of a sudden you're losing 10% or maybe more because you leverage, right? Okay. So what's happening then? A lot of these people, they go like, they're bullion banks, right? They go crazy. They're thinking, well, why don't I just exercise my contract at the LBMA and get the physical and then deliver it to the Comex so that I can complete the transaction, right? Think about that for a second.
Yep.
The LBMA paper is what? Let's say it dumped from $100 to 95, okay? But your physical is still valued at 100 if you manage to get the physical and deliver it to the Comex. Think about that, right? So that's why that's like gasoline to the fire. It's like a doom loop, right? Because there's like that government proxy demand of physical gold at the Comex to start this off with. By the way, before the tariffs even started, right? In December, early December, late November, right? That kicked off the demand spike, which drained the LBMA, which is breaking this EFP trading pair, which is basically compelling these bullion banks to accelerate the acquisition of physical gold even more, right? Because they don't want to lose that paper. They don't want to realize that paper loss, huge paper loss, right? Because their promissory note at the LBMA is taking a dump. Make sense? Right? Yep. It's that simple, right? So it's a doom loop, right? Okay. So people ask me, they say, Eric, what's going to happen if some of these bullion banks that are not friends with the US government, because obviously the losers, they're winners, right? Winner bullion banks are the ones who are close to the US government, who are doing this stuff on the US government's behalf, right? Okay. And they might even be importing physical gold for their own books. Okay. So I think like you know the 400 tons from the LBMA to the COMEX, maybe I don't know, a quarter of that maybe like you know for the U.S. government proxy bullion banks own books. Okay. By the way, now that we're talking about you know all these non-friendly, non-U.S. government-friendly bullion banks, or you know outside of the U.S. government's influence, getting screwed from this you know EFP trading pair because it's reversing, right? Guess how much in total the amount of physical gold that was imported into the US in the month of December and of 2024 and January 2025. Guess. It'll shock you, the number.
The amount of physical gold imported.
Imported in those 2 months. How about I just tell you, right?
Yeah, go ahead
2,000
and tell
metric
me.
tons. 2,000 metric tons. 2,000 metric tons. That's a lot.
Oh.
Like China's SGE for the entire year, okay? For the entire year, China delivers 1,450 tons for the entire year. And the US imported 2,000 tons in 2 months. And a lot of people question this number. Where's this number from, right? This number is from the StoneX CEO, okay? This is a huge commodity trader, okay? And you know, thank you, Ronan Manny. He actually posted this and he notified me of this information, right? So it's legit, and you know,
and that's what we're looking at here on this chart, correct? This is delivery.
No, that's no. This chart is the COMEX votes, the free votes. Like you know, what it's showing is that just at the COMEX votes alone right now, they are in total approximately 500 metric tons of physical gold. That's right now.
Right, and it's spiked, and it spiked towards the tail end of 2024.
That's right. So what I'm trying to say is that all evidence points to the fact that number one, there's at least you know just from the LBMA alone to the COMEX, right? Okay, just at the COMEX alone, there's at least approximately, let's just say 700 tons of metric tons of physical gold that came in. But if you believe in the number, and I believe it, from the StoneX CEO, right? Is 2,000 metric tons. Okay, that's the total, right? But back to the EFP thing. Okay, so let's say
isn't that equivalent to like the annual production of gold?
The annual production of gold. I was talking to Tom Longo, you know, the other day.
Mm-hmm.
I think the official number is around 8,000 metric tons.
Okay,
but so Tom told me that's a BS. Tom told me that's a BS number. He said it's probably around 4,000. Okay, the reason why I think Tom is correct is because China and Russia combined, okay, only produces around 700 metric tons of physical gold. And these two countries are the biggest gold producers. Okay, so where the heck, you know, do these analysts get the 8,000 number from? Mm-hmm. You see what I'm saying? So I think 4,000, you know, let's say 4,000, but like if the US is importing 2,000 in 2 months, that's insane. That's half of the annual mining production, right, of the world. Okay, but back to the EFP thing we're talking about here. If you go back to that, you know, diagram that I have.
Sure.
So what happens? Let's say these, you know, LBMA bullion banks, they are unable to get physical gold to import into the COMEX to fulfill their COMEX contract requirements. What do they do? Like if, like, you know, because it seems like that the COMEX, the CME, the exchange, for some reason, like I said before, is not willing to force cash settle, right? That's actually, by the way, an avenue, okay, for these things to resolve itself, right? So if that doesn't happen, what happens? Now they can't roll over these contracts, right? Because the lack of physical gold situation at the LBMA is not resolved. So that promissory note has a chance to even dump more, right? So if it's potentially dumping more, you don't want to roll over your COMEX contract, right? Does that make sense? You lose more money. Okay.
Yep.
So and they can't just cash settle via EFP because for some reason, like I said, the buyer wants the physical, right? So what are they forced to do? They're forced to cover. What does cover mean? It means that they have to at the Comex, they have to buy a spot gold contract to basically cover their short contract to deliver. Does it make sense? So it's like robbing Peter to pay Paul.
Yeah.
In terms of gold, right? You're not resolving the situation. You're just increasing the demand.
You're moving it down the chain.
Exactly, right? So the whole thing, can you see that, is a doom loop, right? It just makes it worse and worse. That's why I believe, and my friend Nick, he's on X, he believes that any slams, you talked about Mr. Slammy, right? It's going to be very shallow from this point on. If I'm correct, that is. Okay? Now, let's look at another scenario. Let's say I'm not correct. Let's say this is just, like what the experts are saying, right? It's just like a tariff scare, right? Some reason these bullion banks, they don't care. They're incurring additional transportation costs, get the gold in, right? Even without a end buyer, like the US government, who insists on having the physical gold, let's say, right? They just want to hedge, which, by the way, doesn't make any sense at all, right? Now that you hear the entire story. Okay, let's say they're right, though, okay? Well, then eventually this entire thing will reverse, right? Meaning the gold will go back to London. And then gold will have, the gold price at the Comex will have a huge dump, like a nuclear Mr. Slammy, if I'm wrong, that is.
Right.
You see what I'm saying? But I think I'm right. I think, the end buyer of all this physical gold at the Comex is the US government using its bullion bank proxies. And these bullion bank proxies, they are doing some, buying for themselves because they know what's going to come down. Okay? So that's the whole.
Well, why is the U.S. government doing this? What's the reason behind it?
Well, you heard what Donald Trump said, right? Donald Trump wanted to audit the gold at Fort Knox, and it's not only me, but a lot of people. I'm sure a lot of people in your audience have, probably thought about this in the past. That Fort Knox don't have exactly the 8,133 tons of physical gold that the U.S. government proclaimed that it has, right? So let's just say over the years, this is 80 years, right? The U.S. government, I don't know, leased out, lost, shipped out, whatever, right? A bunch of gold. So now they have only 6,000 tons, right? They need 2,000 tons. Or they only have 5,000 tons, let's say, right? They need 3,000 tons, which is what they're doing. They're repatriating gold from foreign countries back into the U.S.
They're sucking the gold out of everywhere else into the United States, making a big golden fort into here in the United States.
Exactly. That's why you have the 2,000 metric tons that StoneX reported, right? And then on like another interesting piece of information for you, I think this is probably Bloomberg that reported. It was like 2 weeks ago, right when this thing hit the news. Okay, Bloomberg said the LBMA is urging its bullion bank members. These are the loser bullion banks. Okay, go on the hook, right? They are asking these bullion banks to beg sovereign central banks to borrow their gold to ship to the US. Think about that, right? That's if that's the case, that's the US government through its proxies repatriating physical gold from foreign countries through these foreign bullion banks. Is literally genius, in my opinion, if that's the case.
Right. So now we have this other chart. So these are the deliverers you've got laid out here. You've got JP Morgan, Barclays, etc. Fascinating.
Exactly. So chart here, right? These are what I call the usual suspects, right? And the wonderful thing about this chart I have to give credit to James Anderson. Really nice guy. Always have the latest and best data. Okay, and he's a researcher of bullion and gold and silver. on X, right? He shared this information with me. And if you look at the chart here in my red circle, these are the basically the highest volume deliverers and receivers. Okay. In the last 26 trading days, the top
You've got some crossover.
deliverers. Yeah, you got some crossover. But some of them,
Yeah.
but you see the C and H. The C means customer account. H means house account. Means they're doing it for themselves, right? Okay, but like it can be misleading because they can say it's house, and then who knows what they're doing behind the scenes, right? They can be acting on behalf of somebody, right? But that's something that you need to be an insider to know, I guess, right? But anyway, the bottom line is, as you can see, there's HSBC, JP Morgan, Morgan Stanley, Goldman Sachs, Deutsche Bank, JP Morgan again, Citigroup, UBS. So basically all the usual suspects are all there, right? That's it.
Yeah, there's been talks about this revaluation of gold on the balance sheet. Do you think that's in play as well? Because currently gold's still valued at what, $42.22 on the U.S. balance sheet. Silver's at $1.23 or something like that on the U.S. on the U.S. balance sheet. Now, if you were to reevaluate both of those metals to free market price or to fair value, which would take the metals valuation from, I believe, just like, all the way up to $800 some odd billion, $870 billion, close to $1 trillion excess into the U.S. balance sheet. Now, we've been hearing these stories for quite a while, but could it be really happening this time?
Absolutely, because I actually talked to Judy Shelton. I read her book. I was commenting on the book. I was talking to her on her thread a while back, and she said that if they are to revalue the U.S. government gold, I think right now the valuation of that gold is $44.22. It's 44.2222. Okay, and they did it last in 1972. And Judy said if they're to revalue that today, they'll do it at mark-to-market value, like you said, Danny. And then one of my followers is actually friends with a ex-central banker, ex-Fed member, actually. Okay. And that particular person said that they are going to do it, and they're going to do it at mark-to-market. Exactly like you said. Like, if it's like, I don't know, $3,200 per troy ounce, let's say in a couple months, that's where it's going to be, right? So you're right, it's going to be, just short of $1 trillion, right? And a lot of people say, what's the point? The national debt is at what now? 38 trillion, I believe. Am I correct?
Yes,
approximately there.
It's some arbitrarily high number.
Around there, right? 38 trillion. And then they need to roll over $7 trillion worth of debt in the next 12 months, I believe, right? So this is like, it's not going to, there's a raging fire and you got a cup of water. What is that going to do? People ask me that. Well, Judy Shelton, her proposal is that this gold, this revalued gold, will be an anchor to a new type of long duration US Treasury bond. Okay? So this bond will be zero coupon, so no interest payoff. 50 years, but the underlying, you can call it asset of the bond, can be selectable in physical gold. Meaning that, let's say in 50 years, you don't want your principal back in US dollars, you can choose to get the gold back. And the gold value is calculated at the point of purchase. Does that make sense? So
yep.
You buy this 50-year bond, right? US Treasury gold bond from the US Treasury. And at the point of purchase, it's valued at, let's say, 6 tons of physical gold, right? Whatever the US dollar amount is right now. And in 50 years, you get back 6 tons of physical gold, right? Okay? Yep. You might say, why the hell would anybody want to do that? Well, guess what? if you get your 6 tons of physical gold back, at least you're not losing to inflation, right? First of all, in terms of the the principle that you invested in this bond, right? And the second thing is, I'm going to bring in another gentleman, okay, into this story. Is Jim Bianco. You probably talked to him, correct?
I had
From
him, but I'd
Bianco
like,
Research. Yeah. Was he on your show, Danny?
no, not
Jim?
yet, but I'd like to get in touch with him.
Okay. Yeah, he's an incredible guy. I talked to him on my thread actually because I was talking about his work, what he said in his recent interview, and then he jumped on and we talked about it. But he is actually saying that Donald Trump, he has insider info, right, from DC, and he's saying that the Trump team is contemplating on forcing U.S. allies to exchange a large portion of the U.S. Treasury bond that they hold right now, right, to a perpetual zero coupon U.S. Treasury bond. Now that is like shocking, isn't it? Right? Zero coupon, fine, but perpetual means forever. That means you lose
Explain
your
the
principal.
significance to that. Explain the significance of that in simple terms.
In simple terms, it means that Donald Trump wants to decrease the interest payments and decrease the U.S. government debt by forcing U.S. allies to switch over whatever portion of whatever U.S. Treasury bonds that they have to this zero coupon, infinite duration. Essentially, if you have like a perpetual bond, is infinite duration, right?
Right.
Bond. So you lose your principal, right? But like Jim said that Donald Trump's team's logic is that the United States protected these allies militarily for the last 80 years. 80 years. Without charging a dime. Post-World II, right? Okay, without charging a dime, right? So this is all for, like we protected you. You didn't spend any money on your military, right? All these years. So now it's payback time. That's what that is.
Wow.
But anyway, so that's the idea, right? But like I actually talked to Jim. I said, hey, Jim, the perpetual thing doesn't make any sense. Nobody will go for that. Not even U.S. allies, right? And then Jim said, yeah, it's probably going to be 50 years or 100 years, like a century bond.
Yeah,
right?
Long enough.
Okay, that makes more sense, right? Long enough, so you do get your principal back. But whoever signed on to it probably is not around at that point, right? Like I probably won't be around in 50 years, let's say, right? So whoever signed on, approve it, it's not going to be here at the
not going to be their
point
problem.
of maturity. Yeah, it's not going to be their problem, right? But then I think the gold aspect makes sense too, because if it's fiat, like just U.S. dollar, U.S. Treasury bond for 50 years, zero coupon, right? You're going to lose your shirt, right? Because there's going to be inflation. There's going to be inflation, meaning that whatever principle that you got locked in with the U.S. government, you're going to be losing your shirt. So it makes sense that Judy Shelton is proposing the 50-year U.S. Treasury gold bond. I think everything fits together. I think they do have this plan, and I think they're in the process of implementing it. Okay? That's it.
And how does that fix the U.S. debt problem?
Well, think about this then, right? If you have, like, let's say U.S. allies who buy at least half, let's say, I'm just throwing a number out there, right, of U.S. Treasury bonds, right? Okay? And the U.S. government forces it to convert half of their U.S. Treasury holdings into this, right?
Right.
All of a sudden, you guys just cut your interest payments by 25%. Boom, like that. That's immediate savings, right? Because that's your biggest problem right now is U.S. The interest payments, right? Interest payments on debt is so high, right? It's higher than the defense budget, right? So this would resolve that.
Fantastic, interesting insights here, Eric. I want to get your views on what's going on in your neck of the woods over there in Asia, and more specifically China. I've seen these videos of people just scrambling to get their gold in China and at these retail shops. Is there Is that just kind of like a one-off, or is that a serious phenomenon that's going on there? And kind of give us a rundown as to what's going on there in China and how they're, if you have any updates regarding the accumulate program or anything else.
Yeah, so Danny, that's like I keep telling you, Chinese people they buy gold at every single price point. So reality has shown you that I'm correct. Because last time I talked to you, I think gold was at $2,500, and now it's 2,900, and they're still buying, right? $400 more, they're still buying. So basically, there is a lot of demand, but there's no shortage yet. Okay, I think China is really smart. China wants to keep the gold flowing to its consumers so that Chinese citizens are protected. And the gold accumulate program is working really well, actually. A lot of people, they're going to the bank, they are requesting for physical gold. And some of these bars are out of stock, of course, right? Because they're, I think the medium-sized bars are really popular, right? But there's still stock that people can get within a week from the banks in China. It's not out yet. And I want to say this, Danny, that it is not in the Chinese government's imperative, it's not their goal to cause any kind of shortage of physical gold. They want the gold to flow, you see, right? No matter if there's a temporary demand spike, okay? They want the gold to flow. They want to import enough physical gold into the country so that the citizens can get their gold. Now, you might ask me, well, where are they get their gold? Because it seems like the LBMA and Comex are tapped out, right? If it's the U.S. government and the proxies who are taking physical delivery, well, China, President Xi went to South America, had made a lot of deals with like different countries all over the world, right? Made direct deals with the miners, so they're getting these, unrefined gold and silver, ore, right, from these countries, and then they're importing that to China, and then they're refining it in China. In some cases, they're building refineries at that country as well, right? Okay, so they put in both, but they're going right to the source. That's my whole point. So they are getting the gold. Yeah.
Are these countries going to become targets to Donald Trump then, if they're cutting these deals with China? Do you think
it's possible? It's possible, but like I think Donald Trump, his prerogative, I think, is to make America great again, to protect Americans. Okay, so if China is doing stuff for themselves, I really don't think Donald Trump is going to do anything to China on that front. But if China is trying to sell, let's say, electric vehicles that are 30% or 40% less in price than, let's say, a Tesla, then Donald Trump does care. Okay, so that's what I think in terms of your question.
Yeah. Fascinating interview as always here, Eric. Anything else you want to talk about before we wrap up?
I think we're all good today, Danny. It's great to be here again with you. Thank you. Appreciate that.
Yeah, for sure. Where can people find you if they want to hear or see more?
At King Kong 9888 on X.
Okay, we'll have the link to that down below, so be sure to check it out, guys. If you enjoyed this program, be sure to give us a like and subscribe so you don't miss another episode like this. If you agreed with Eric's take in all of this, right, go, Eric, go in the comment section. If you disagreed, however, do let me know. I do read the comments. And then check out our Substack over at capitalcosm.substack.com, where you can get early access and ad-free versions of all of my videos, as well as uncensored versions for the ones that warrant it. You also get a chance to ask any of my future guest questions, which will be prompted on the show. You get to make recommendations to me as to which guests you want on the show as well. So take advantage of the offer. It's also an easy way to support the channel monetarily. So with all that said, I will see you in the next episode. Eric, thank you for watching. Guys, thank you for watching. Eric, thank you for coming, I should say. Guys, thank you for watching. And I will see you in the next episode. Bye, y'all.